Okay, welcome everyone. My name is Vendy and you are welcome to the channel. Today we will discuss ICT Power of Three. It's one of my favorite um, strategy I see online that actually complements what I've been trading for a very period of time. But I think I will explain the basics, all right, before I will introduce what I'm actually trading, okay, and how I trade. Okay, but I think this will really help us to get clarity, get understanding of how the market really works. ICT Power of Three strategy. It's a very good one. All right. It's a strategy I am very okay and satisfied with how it is. Okay, I don't know the inventor. I don't know who invented it. It's a good one. All right. So, without further ado, let's just explain how this thing is. The word ICT Power of Three is basically divided into three parts. All right, we have the accumulation, the manipulation, and then the distribution. All right, so these three concepts. All right, I don't know why they call it manipulation and distribution and all those stuff, but it's a criteria that every candle is divided into these three things. Every candle has these three things. So ICT Power of Three, the way they is being presented, it's on a daily time frame. I believe it has a New York session. Okay, I think the manipulation happen in the okay, they have accumulation happen in Asian. Eh, I think so. Okay, they have accumulation. They believe it happens in Asian period trading section. They have manipulations happen during New York and expansion happen during Tokyo. There's how they just explain the whole lot of things, but it is little sign and a symbol of what happens in every candle, be it 1 minute, be it 5 minutes, be it 1 hour, be it 30 minutes, be it whatsoever, be it weekly, be it monthly, in fact, be it yearly. All right. So this pattern always found himself in every candle, all right, because every candle has a week, it has a opening price, it has a week, it has a close price, and then it has a high. If it is a daily candle, it has a low of the day. There, it always has a opening of the day. It has a close of the day. It has a high of the day. So if it is 1 hour, you have 1 hour low. It has 1 hour opening. It has 1 hour close. It has 1 hour high. All right. So every candle has this pattern. So if you say that it happens in New York, manipulation happen in New York, it happen in Tokyo section. So what happened when the same scenario happens in a 1 hour time frame? So what section would that be? All right. So this brings us back to the basics of trading. Okay. So this particular PDF we normally read on baby pips when we were starting, all right, where they explain a candle pattern and how candle is being formed, you will realize that the whole of the ICT Power of Three, okay, we are basically being okay analyzing baby pips, but we did not take caution of it. We were looking at indicators that will give us money. All right, but it's a very good strategy. If you go to the chart now, every I repeat, every candle, all right, always have a wick, no matter how small the wick is. All right, it can be a peep, all right, or a pipette, but every opening always have a wick. All right, then it has a wick, it has a opening, it has a close. All right, so now this will really help you to have a bias in the market. All right, so it's not just a strategy, it will also help you to have a bias. That means having market direction, where market will tend to go. All right, so it's a very good means of predicting how the market moves. All right, so let's take an example. Okay, I'll just show you some pictures All right, this is a bearish ICT Power of Three. All right, I see this at okay, accumulation, manipulation, and distribution. Okay, so this is the power. This is how it is. Okay, this is typical example. It has opening. All right, so during the opening, you have the accumulation. It will always have this support and resistance in a low range that it will be moving around. Then it will always break off the resistance, all right, and then continue in the right direction that the market's supposed to go for the day. All right, so this happens every day in the market if you are using daily candle, and this is typical example of a bearish AMD. So these are the little things you need to put into consideration when you are looking at ICT Power of Three. All right, it's a very good. So this is example on the chart. Okay, in trading view chart, you will have something like accumulation, manipulation, and distribution. So we have another accumulation. So the concepts repeat itself on a daily basis. So when you look at the instrument you are trading, okay, you stick with it, all right, you tend to know the behavior of that instrument. And then in this kind of strategy, if you are taking it, please and please don't try to do a trend reversal. It will always be against you. Okay, trend reversal, this is not a strategy for trend reversal. It won't work that way. All right, so always try to make sure that you are in line with your trend. Okay, there are several ways maybe I will do a video on that, on how to identify a trend so that you stick to it and then stay with the trend. So if market is not trending, this strategy will not work. All right, so it's a very good one. So in every market, we have this accumulation, manipulation, and distribution. So AMD is a strategy that works on every candle you are trading. So every candle always have an opening, a close, and a wick on both sides. So it's a strategy that if you open inside of every chart, okay, let's take this vertical line as a complete day, all right, in which if you change your candle into daily candle from this first vertical line to the from this vertical line to where there's another vertical line, all right, is the entire one candle. All right, so if you open inside one candle, you will tend to see something like this accumulation. There will be a little manipulation, like the market jerking towards the wrong direction, and then it will now expand, all right, and distribute towards its original direction. So these things normally happens. It's a strategy that ICT concept bring, which is very, very nice. It's perfect. It align. It's exactly what I've been trading for a very long time. But I did not know about this name. All right. So, but it's a strategy that works. Okay, 85% of the time. All right. So, but you need to have a perfect entry model. Okay, what you enter off of. Okay, so that will really help you too. Okay, so without further ado, let's just jump into the chart so that I will explain this in details. All right, this is GBP JPY. Okay, this is GBP and JPY. It's my favorite pair I trade. So this is a daily candle. All right, this is a daily candle. Okay, so this is my resistance zone. I think let me clear some things. This is my resistance zone. I just want to use this particular one and explain what this thing is. All right. This is today. All right. This was yesterday and this was on Friday. This particular candle was on Friday. Okay, I think I took a trade. When I expand, you will see it. All right. So I have indicator that always divides my day for me. All right. This was the opening of. Okay, let me pick a line. Okay, this was opening of Friday. Okay, that line there was opening of Friday. Okay, and this was week of Friday, the week the candle print, and this was close of that same Friday. Okay, so it was the close of that same Friday, and then this was the week of that same Friday. Okay, let's take that because I know I took a trade on Friday. Let's go to 15 minutes, all right, so that you will see how this thing is. So this is today's trade. Okay, fine. All right. So this was yes on Friday opening price. Okay, it came down, did some this was opening price. Okay, it came down, and then there's something I always explain about entry models. Okay, entry models is I always have entry models in every trade I'm going in. All right, so I enter this particular trade off of previous day fair value gap. So your entry model can be support and resistance. Your entry model can be a fair value gap. It can be Fibonacci retracement. There are other so many entry models. Okay, so you choose an entry model. It can be an engulfing candle. Okay, whatsoever the entry model is. All right. So if actually you were on this trade, even if you are using engulfing candle, this could have been your engulfing candle. You enter the trade off here, and your stop loss will be below here. It could have still been a winning trade. Okay, so this was the opening of the day. It came back, create a wick. So the whole of this accumulation was a wick. All right. The whole of this accumulation was a wick. The whole of this accumulation was a wick. Then the market expand, okay, and then did another accumulation, which I was no longer interested in it. Okay. So let's say this was on Thursday open here, all right. He did not create a physical wick that we can see. Look at it, this is when Thursday open. He did not create a physical wick. Thursday open around here, he create a little wick. If you go back to daily time frame, you will see. Let me go back to daily time frame, all right, so that I can show you that. All right, this was Thursday. That's why I show you is that market always prints week. Okay, let me zoom in. This is Thursday, and this is the week that the market prints. All right, okay, so there is a little week before the expansion of the day. So the truth of the matter is that if you know the overall trend, if you know the overall Okay, the truth of the matter is that if you know the overall trend of the market, okay, this will really help you to predict, to have a good bias of where the market is going each day. All right. So if you go back to 15 minutes, all right, you will realize that, okay, this is today. Today we have opening of the day here. We have a little wick here, and then we have an expansion. You understand? Yesterday, okay, this was yesterday market. I think Monday opens here. Okay, it came down to preview that Friday fair value gap. Let me draw that so that you will see. It came back to Friday fair value gap and then pick it up there and then expand. Okay, and then this was on Friday. I've explained that already. This was on Thursday. It came back and picked from the fair value gap that was made available, and then the market expand. So this was on Wednesday. All right, it came pick up a liquidity grab of previous day, and then the market moves. And the Wednesday, this was the opening of Wednesday. It created a week at the top first. Okay, this is a manipulative day. So if you don't know the direction of the market, you will sell today. This particular day, you will sell if you don't know the overall direction of the market. That's why I said you should always know the trend of the market. And another thing is that if your setup is not lined up, there is no need of you going into the trade. If you don't have clarity on how this market is going, just keep that day. Don't trade. Okay, nothing will spoil. Nothing. Just keep the day and then just monitor how that day goes and you are good. All right. So that when next you see that kind of setup, you will be able to know exactly what to do. All right. So that is how it is. So every day must not line up. And then when you know that you are at almost a resistance, a strong resistance, maybe a daily resistance zone, please just kindly stay out of the market during that period and know exactly what the markets want to print. All right. Always stay in the market. Wait for the market to print its direction before you get into it. All right. So I believe this really explains the ICT power of three. Okay. I call it AMD. All right. So I believe this really explains AMD for you. So if you want to take this as a strategy, all right, you can chat me up. I'll give you a PDF. Maybe we'll just do a live trading together on Telegram. I can send you the rules. You can follow this as a strategy, then give you some few entry models that you work with. Just backtest it for minimum of 2 months and then derive your data from there. You will now know that okay, fine, it's a good strategy to start off. It's what I've been trading, just that I've modified mine a little bit. So if I'm doing day trading, it's exactly something like this. But if I'm scalping, it's the exact same thing, but in a lower time frame. So I get into the market, I trade only 1 hour candle, and then I'm good. Okay, so it's the same thing. So there's no different. Okay, it's exactly what I'm trading. Okay, so I don't used to give things big name, but if this is what they call it, then let it bear the name. Backtest this and then derive your data. All right, how many winning trade you have in an entire month if you are trading only this. Write it down. Try it for previous 3 4 5 years. Okay, get the data done and then forward test it for like at least a month before you try entering it with live accounts. Okay, and I can assure you that if you stick to the models and the rules concerning this particular strategy, you definitely have minimum of 60% win rate, and that is good enough. That is over good, all right, for you to work with. All right. So I believe this explained it very well. So don't forget to do the YouTube business.